Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing so exciting it's like finding out your grandma invested in a tech startup and actually made money. Get ready because this one is about distributions, debts, and maybe a little bit of investment magic. Today we'll be decoding the latest report from T. Rowe Price OHA Select Private Credit Fund. In short, this report tells us about how the fund is doing and how much money it's giving back to its investors. We'll look at their recent payouts, how they're managing their money, and how many shares they've sold. It's all about understanding where your investment is going and whether it's growing. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss all this and more. First up, the date of the report is April 28, 2025. This is important because it tells us when the information in the report is current as of. The company we're looking at is called T. Rowe Price OHA Select Private Credit Fund. They're set up as a Delaware corporation, which is a common choice for investment funds. Let's jump into the main event distributions. The company declared regular and extra distributions, which is like a dividend for each class of its shares. Here's where it gets interesting. They've broken down the distributions for different classes of shares, Class I, Class S, and Class D. For Class I shares, the gross regular distribution is $0.22. Theories and $2 per share. There aren't any shareholder servicing fees, so the net regular distribution is also $0.22 $30 per share. There aren't any shareholder servicing fees, so the net regular distribution is also $0.20. Plus, there's an extra distribution of $0.032. For Class S shares, the gross regular distribution is also $0.22 ZR'd. However, there's a shareholder servicing fee of $0.0193, reducing the net regular distribution to $0.03 The total net distribution is $0.2110 after 1 times, with the extra distribution of 0.21. The total net distribution is 0.218. The total net distribution is 0. Class D shares also have a gross regular distribution of $0.27. The shareholder servicing fee is $0.0577, making the net regular distribution comes to $0.1943 The total net distribution comes to $0.2243 per share. These payouts are scheduled for around May 30, 2025 for those who were shareholders as of April 30, 2025. Now let's switch gears to the value of the fund true scroll, determined in accordance with the SEOD Dubai IRNDI of B1 2025, the net asset value or NAV per share for all classes is $27.25. Is basically the market value of the assets the fund owns minus any liabilities divided by 27 tolerance minus any liabilities divided by 27 tolerance minus any liabilities divided by the number of shares outstanding. So each share is backed by $27.25. EMV is basically the market value of the assets the fund owns minus any liabilities divided by the number of shares outstanding. So each share is backed by $27.25. Assets. The fund's total NAV was about $1,252, $8 million. The investment portfolio was valued at $2,170 and 7 million TEF, and I had $926 stocks and 1 million in outstanding debt. This gives them a debt-to-equity ratio of about 0.74. In simple terms, for every dollar of equity, they have 74 cents of debt. This is important because too much debt can make a company risky, but managed well, it can help them grow. The company is offering up to $2.5 billion in shares to the public at how many shares they've issued so far. They've sold about $44,724 at about 44,702,560 Class I shares for a total of $1,124, 3 million fallen. Class S shares, they've issued $2,824, $3 million. And for Class D shares, they've sold $619 million now. What does this all mean? T. Rowe Price OHA Select Private Credit Fund is actively managing its assets, paying out distributions to shareholders, and continuing to offer new shares. The debt-to-equity ratio suggests they're using debt, but not excessively, to boost their investment power. One thing to keep an eye on is those shareholder servicing fees. While they might seem small, they do eat into the returns for Class S and Class D shareholders. So if you're an investor, make sure you understand what you're paying for. On the offering, this continuous offering indicates they're actively raising capital, which they're likely using to invest in more private credit opportunities. Whether that's a good thing depends on how well they deploy that capital and the returns they generate. Looking at this report, the fund seems to be in a stable position. It's distributing income, managing its debt, and growing its capital base. However, as with any investment, there are risks. Changes in the economy or credit markets could affect their investments and their ability to maintain these distributions. Alright, that's our breakdown of T. Rowe Price OHA Select Private Credit Fund's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.